Good morning, everybody. It is Monday, December the 19th, the week of December 23. We have a full, complete week, Monday through Friday, full trading sessions, Monday through Friday. On Friday, we are getting the GDP numbers, we are getting the PCE inflation report, and as of right now, 5:45 in the morning Eastern Standard Time, we are at the highs of the session, embarking on the 3900s. The S&P is right at 3898 on the futures. We are at 11408 on the Nasdaq futures, well below that 11551 pivot. We are back up above the 10% from the all-time highs on the Dow, and the Russell 2000 has held quite strongly during the course of these last couple of months. And with Friday's bullshit CPI report from the European Union, where it was greater than expectations, and when you read the report and you saw that the countries that actually have a GDP were much better than they were back in November. And the countries that are all bordering the Ukraine issue all had higher than expected GDPs. As if the fuck Lithuania ever fucking mattered since the basketball team that they had back in the Olympics. Come on. But in any case, it does give me the opportunity to set everything straight and make the disclaimer publicly known. I am an American, but I am not a woman. Thus, I can be wrong once in a while. Not a woman. On Friday, again, just like on Thursday, I was talking about the low edge of the spread calculations and the range holding. 38.95. I had 38.91. It got pressured. I need to highlight that and make it so that I have a record that it was pressured. And as you see, it held and we closed above it. Same thing took place on Friday. 38.52 was the low range. 38.27.91 was as low as we got. We made it to 38.16. But on that disclosure of, once again, I am an American, but I'm not a woman. Thus, I can be wrong once in a while. I spoke very strongly on Thursday, very strongly about that 39.30 area being support. And after we had the ECB and the Bank of England come out on Thursday, we opened right there. We had that big gap down from 39.95, 39.58, and we lost 39.30. We lost it. We closed just below it, 38.95. And then Friday they came around and did this thing, and the EU CPI and blah blah blah. And every bear came out of the woods and started carrying their big rainbow flags on how this is going to be better than 2018. I was wrong back on December 7th when I said that 39.50, 39.40 area was our main support. And on that 39.50, 39.40 area, we closed at 39.33, 7 points below it. So, again, I'm an American, but I'm not a woman. Thus, I can be wrong once in a while. So moving straight onto the charts, because this is going to be the one video for the week, and we're not going to do any other updates during the course of the week because I've already prepared everybody heading into this week with the Santa Claus pause, with the view of everything. I'm an American, not a woman, very strong opinion back on Thursday that we were not going to break 39.30, and we did break 39.30. The VIX, start with that. VIX, look at this, up, nothing. Absolute nothing burger on the VIX. Again, it is confusing the greatest of traders out there why the VIX is not imploding and shooting up into the 25s, 27, 28s as we had this minus 6.6%. That's what our drop was. Going to leave that here on the default. No, on the no lines, because I had this calculated and I want to show this. Going back over to the VIX, again, the VIX is having an absolute nothing burger. I'm watching option flow. I'm watching everything I can watch out there. Every indicator that I'm constantly watching for the last 4 years. Nobody's buying VIX calls. Nobody is buying VIX calls. If anything, people are loading up a little bit larger on the puts than they are on the calls. The spreads that are happening that are bearish and looking for bearish positions, they're minuscule. They're spreads that my 14-year-old could do. So again, the VIX is saying that you have the Santa Claus pause. Come over here onto the SPY. And again, I mentioned it over in the chat on Friday. And you know what? For those that never really embraced getting into charting, this is one of the coolest things you could ever see was the CPI spike. We went directly to the 50 retracement of the all-time highs back in January down to those October lows. We nailed the 50 retracement. And then you come over here on Friday, and on Friday, we nailed the 50 retracement from this high. And it held to the penny. One of the coolest video games you will ever play is the SPY. One of the coolest. But again, you got to remember, unless you're not an American and you are a woman, you got to be ready to be wrong once in a while. So again, come over here on the SPX. You got a perfect ABC. C equals 2 times A. Right down there to 38.37. Right down to the upper gap area that we had that I kept mentioning from way back over in the November CPI. Closed fractionally below that bear market level, that 38.54.90. And here we are on the futures. We are up 18, going on just 2 points away from the highs right now. So we are looking to close open somewhere above here at this 38.67, 38.70 area, which again, you only have this one gap from Friday, and then you have this bigger gap that you had from back earlier in the week on Wednesday, Thursday from the ECB, Bank of England. And then we have this 4,053, 4,064 that we have to worry about. Now you come out, you say, well, yeah, that 4,000 part. Well, here in September, you're here at 4,100. Here in December or November, you're here at 4,100. Here again in December, you're at 4,100. So guess where you're going to be heading to? 4,100. 4,100 is going to continue to be your problem area. Can we make it there by Christmas? We're talking about 9 trading sessions between now and Christmas to make a move, which on last week, when we looked through it, everybody looked at how horrible the week was, where we wound up being minus 87 points on a 273 point move. We opened at 39.39 and we closed at 38.52. And we do have 2 red weeks in a row. 2 red weeks in a row, which you can go back and you can look through this historically as far back as you want to look. It's extremely rare. It's almost as rare as an American woman being wrong that you will get 3 red weeks in a row. It just simply isn't one of those things that takes place. Now, when you look back on the lowest range of the year, that being August, which was only 370 points for the entire month. If that low is the low, that 38.27.91 that we produced on Friday, considering how oversold we are on every time frame that's important, that 38.27.91 and that 370.75 being the smallest range of the month, we'd be looking at 41.98.66. Should it be that that does fail, which I can't see anything out there saying that it is going to fail, then we're looking at 4,100 being the high of the month, that 370.75 being the smallest range month of the year, and we'd be looking at 37.30.21, which 37.30.21 would completely fill the CPI gap, which is back at 37.48, and it would turn around and let everybody sit there and scream and holler and say 99.9% of FinTwit was absolutely correct. The 0.1% that was saying that we weren't going to be having the regular Santa Claus rally, back up into the 4100s, that 0.1% was wrong. And again, look back on your charts, look at your time frames, look at what you've got. It's just simply something that isn't sitting there pounding the table saying, yes, you are. SPY back up here above 389.92, back above 390. You've made your first step. Back above the 100-day moving average, close above the 100-day moving average. You've made your second step. Get back above that 397 level. You've made your third step, and you're ready to jump up there and touch the rim, and you're going to hit that 200-day moving average. The 200-day moving average, as everybody knows, you've seen it, you've noticed it, you've paid attention to it. It's one of those places where everything constantly continues to fail every time we get up to the 200-day moving average. We get up to it, we close above it, watch out. You're looking at that CPI level, like I was saying. Can we do it by the end of the year? Questionable, but yeah, it can be done. And you've got here, again, 1, 2, 3. So you've got your perfect ABC. Copy over here so I can waste your time and you can see how you do these kind of things. You got your one, excuse me. Here was your 1, there was your 2, and here is your 3, your 3C. So again, fail that, then close back up above 3,900, get back up here into the 3950s, fill that gap back up there at 39.95, and you're off to the races. You're talking about Santa Claus, and you're looking again for that same 41.15, 41.55, plausibly from a calculated point of view, up into that 4,200 level. QQQ, not really horrible, even though you did get 4 consecutive big hammers on the way down. Here on the QQQ, you're down, you're down, you're down. You're down at 275. You're down and you're holding over there. Well, you've got your volume shelf over here at 282. That's your primary volume shelf. After that 282, it's the same 291. 290, 291. Right above that 286, which everybody remembers 286. 286.10, 286.10, 286.10. 286.10, 286.48. Those are your levels right there that you need to be looking forward to getting back up above. How you're going to get back up above that? The easiest way to do so was going to be something out of China coming over here onto Apple. Apple, like I was showing before, you've got a massive support level down here on Apple. Over here on a wider view, you can see it even larger, a massive support level here over on Apple. So again, looking over here on Apple, you're looking for somewhere into that 145 area, 151 if you can get the greatest of greatest returns on this as we move forward. And I can tell you personally, from my point of view over here, lemons have gone up 50% in the past 2 weeks. And the reason being is because all the Chinese are buying lemons because of the COVID stuff. And everyone that we've spoken to, contacts directly, business suppliers that we deal with over in China, they've all said the same thing. You get a little bit of the sniffles, a little bit of a cough, and it's nothing other than that. So prepare to open yourself up for when it starts to start hitting that China is reopening and China is moving forward. And that, bring it back, because again, this is a once in a week view that we've got here. What we'd be looking at is this being our 1, 2 is what we were looking at before. So now what we're going to do here is we are going to adjust it and bring you up here to your 4 and your 2. And you're looking somewhere around that 44, 43 for your 3 or your C. And that's the reason why on Friday I decided on my own accord to go out and get some March SPY 430 calls for the chance that we are looking at the A, B, 1, 2, and this being the 3, which a lot of people I deal with in my line of work were looking at the same thing as an ABC. From a bullish point of view is a 1, 2, 3, this being the 3, this being the strongest wave of all the 3s, definitely looking to go up there to around that March high around 4,600. take your dip down back around that 4,300 with the August highs, and then you're crushing up into the 5,000s, and then it's the end of the world. Forget it. Go buy a bunker, buy as many canned goods as you can, because from that level up there, if we do get that, you are going to be heading down lower than you have ever seen in 5 years. So on that note, I will bring you back once again and make sure that everybody does understand I am an American, but I am not a woman. Thus, I can be wrong once in a while. Merry Christmas. I love all of you. Happy Hanukkah. Shalom. Happy Kwanzaa. Have a fantastic week, and we are going to be having a moneymaker.